Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Becky Strum. She's a reporter over at Mansion Global. We're going to take a look at how Brexit and trade wars not only impact the stock market, but the luxury real estate market. Becky, it's great to have you with us. And before we get into who's being impacted, what are some of the concerns buyers are looking at?
Yeah, so there are two major overriding concerns globally. And one is that since the last financial crisis, home prices have steadily appreciated over the last decade and basically reached peak in 2018 to the point where home prices were so high that high net worth individuals didn't see the upside. They were worried about deflating prices and holding back on purchases because home values had appreciated so much over the past decade, more or less. So that's sort of a reigning concern in most places. There are also many cities that have taken steps to stymie that inflation, price inflation. So for example, in Toronto, there have been increased transfer taxes. Same in New York, we recently passed, that goes into effect July 1st, an increased mansion tax. London has had 2 waves of increasing stamp duties there. So ways to sort of cool the market. And so so price growth has been a concern for luxury buyers, but also general economic uncertainty is a major concern, and that's very localized. For example, in London we have Brexit and the sort of uncertainty of when and how, what the deal is going to look like, the extension we have now till October 31st. And in the US, we had tax reform, which had played a role in markets like New York and other high tax areas like California, where buyers were not sure how that was going to impact their personal finances, so they were pulling back on making major home purchases. And so there are also places like Australia that have increased the hoops that foreigners have to jump through to buy homes. Hong Kong has also instituted a foreign buyers tax. So, the increase in prices and then the increase in hurdles that foreign buyers have to jump through, or the property taxes that they have to pay in order to buy in many of these luxury hubs.
So at Mansion Global, you found that luxury real estate markets are slowing in the short term as Chinese buyers are pulling back a bit.
Right, they play an enormous role in a number of markets. They're the #1 foreign buyer cohort in the United States. They have been for the past 5 years or so. In London, they are still the #1 foreign buyer cohort. And they are also driving sort of secondary luxury markets, so to speak. So places in Spain, Madrid, because of golden visa schemes, they're also purchasing homes in places like Greece and even Turkey. Them scaling back will affect many markets beyond places like San Francisco, Seattle, or Vancouver that we associate with sort of these West Coast areas that have large pools of foreign Chinese buyers coming in. I mean, even places like South Florida, which it was basically a place where Latin American buyers would invest, but now Chinese buyers have become a bigger player there, and so them scaling back really does sort of rock the boat.
So it even sounds like, going back to the UK, that they're adopting a wait and see attitude. They just don't know how these policies or when these policies are going to play out.
Right, and that has been not just Chinese buyers, but broadly speaking, buyers have decided to wait on the sidelines, maybe rent a luxury home. You know, that's been a sort of a trend we've seen both in New York City and London, that a wealthy foreign would-be buyer decides to sort of camp out, so to speak, in the high-end rental market. Right. And so that fuels rental growth there and more leases being,
Right. So which markets are the most attractive to luxury buyers? You had said there's some secondary ones popping up like Spain and so forth, but what are they looking for?
Right. So there are places that have taken advantage of the shift and high prices. For example, Spain, Portugal, they have created golden visa schemes that allow residency. They offer very low tax environments that are the antithesis of places like London or Hong Kong or Vancouver that have made it much more expensive to transact. They've made it it's not only cheaper property values, but also if you open a bank account there, you'll pay fewer taxes on your income, et cetera. So, and offering residency in addition to that. So that's very attractive to Chinese nationals, for example, Russians, like anyone that is looking at the benefit of having second residency somewhere, and also educational opportunities for children, things like that. And so also, if you are talking about the U.S. specifically and sort of areas that have benefited from the shifts in the U.S. tax reform, Miami, which is a luxury hub in the U.S., has benefited a lot from that because Florida does not have an income tax. And even areas around Seattle, even though Seattle has had very strong price growth in recent years, sort of the suburban ring around it has benefited because Seattle or Washington State also doesn't have an income tax. And we saw prices in Nashville appreciate very quickly over the past 2 years. That has sort of cooled down to some extent.
You're seeing a lot of corporations move to Nashville as well.
Right,
and
exactly.
And out of New York.
Right. And Amazon obviously helped Nashville's property market. Those are areas where the prices are low comparative to places like New York and San Francisco, where they're very high, and where the sort of overriding tax and political environment is more accommodating to a high net worth individual.
It's tough if you're a blue state right now.
Yeah.
All right, Becky, thank you so much for joining us. Yep. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.